Hi guys, hi everyone. Good morning, good afternoon, good evening, guys. Wherever you are, welcome to IC Market Webinars. How you guys doing? Can you guys hear me clearly? Okay, good morning. Okay, good morning. I will say good afternoon to you. Where you guys tuning in from? Okay, that's right. Last time the IC market we are streaming YouTube, but I think the beginning of this month, I think last month, this month, we are starting to stream in Zoom. So you need to register. How you guys doing? Bahrain. Oh, okay. You're in Bahrain. It's morning 8 a.m. Okay, so I'm based in Singapore. So right now it's 1 p.m. Okay, 1:03 p.m. in the afternoon. Okay, shall we just begin our session? I don't want to keep you guys waiting. I think I'm gonna spend time about 45 minutes to finish the slides. And after that, we're gonna look at the light chart together. Okay. And of course, today we're gonna talk about a chart pattern that actually works. Okay. And now always, guys, before we start the webinar, disclaimer first. Oof. So, am I the correct one? Hang on. So basically, everything. I need to place the wrong one. Just hang on, guys. The why is all in Thai? I see market. Hmm. Um, just a minute. Okay, because I placed the wrong disclaimer. Okay. So basically before we start the webinars, guys, disclaimer. So basically everything in this video is purely educational in nature. Nothing in this video should be considered as an investment recommendation or any kind of trading advice. So if you guys want to trade, just do your own due diligence before trading, and always remember that you are responsible for your own trading decision. Okay. And risk warning over here, right here. Okay, trading forex and CFD carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading forex and CFD may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Please read and ensure you fully understand our risk disclosure. Okay. All right, so this is the agenda for today. So basically what we're going to cover are the continuation and reversal pattern, measuring objective plus realistic axis, filtering low quality pattern and live example. And just in case you just know me, today my name is Peggy. I'm an investment analyst and a prop trader. Okay, so what are the chart pattern? So basically, the chart pattern is the represented price structures. We know that those like double top and double bottom or M pattern or W pattern. I'm gonna cover that later. Okay, and the pattern, okay, are not the signal, but they give you the contact. You still need to confirmation. So whenever you see the pattern, you need to always wait for confirmation. It's not the trade signal. Okay. One thing that the chart pattern they show you, which is human behavior. So the trader reacts similarly to fear, greed, and uncertainty, creating a repeatable patterns. Liquidity zone. Capital pool in a predictable area. Pattern show you where the order clusters. Contact only. Pattern don't say buy or sell. Okay, they give you the contact. Confirmation is still required. So whatever you learn as a part the strategy, you always have to remember that you need to wait for the confirmation. Okay, always wait for the confirmation. Okay, I'm gonna explain that later. And there are two types of the pattern. Okay, only two types that you need to know. We have continuation and reversal pattern. Continuation pattern and reversal pattern, which is continuation, then pauses, and then continue. Okay, like if you're gonna look like rally based on the price rising. Okay, after that you're gonna see like pullback or being sideways and then continuation again. Okay, we have flat, we have pennant, and we have channel. Okay, trend pauses, then resume direction. Reversal, trend weakens, then changes. Head and shoulder, double top, double bottom. Okay, it show you the momentum fail and direction shifts. Okay. Continuous pattern. Okay, I'm gonna show you like three of them. Okay, we have the flex. Okay, it's a strong move. So basically, this is for the training. So basically, this is price come from where? From here, right? Price come from here. We're gonna look at the light chart later, and then being what sideways. Okay, and then I continue to go downward. Okay, and we have pause or consolidation and wick and exit. So actually, you can see what is a pennant. It's something like that, being like squeezing, being sideways. Okay. I think we could see it in gold as well. Show you guys later. And then we have channels. So channel to me is similar to the flag. Okay. Why I cannot delete? Yes, sir. No. Erase. Why cannot erase here? Eh? What's wrong with this? Erase. Okay. And then we have the channel. Okay. To me, channel is similar to flag as well. Okay. And then we have the reversal pattern. So basically, reversal pattern is the more dangerous. Most trader may try to catch top and bottom. So it show you the weak momentum. So basically, whenever you see those like a reversal pattern, you can use the eyesight to look for the divergence, right? So basically, if price kind of make the higher high, but you look at momentum, it's make a lower high. Okay, you know divergence, right? So whenever price I think I have to stop using this one. Okay, so basically, you're gonna see something like price make the higher high, right? And start to falling, okay? And the R side is make the start to make the lower high. Okay, this is the bearish divergence, okay? And the structure break, price might break the key level, plus swing low and high to the signal intent reversal. So whenever you look for here, price make the higher high, higher low, high high, higher low. Whenever price break this low, this could be the support level. It become your turn back to be your resistance. So whenever price break of structure here or chain of character, you wait for price to pull back and then you sell. Okay, so meaning they break this recent low. Okay. And the confirmation, wait for the price to close beyond or below the structure. No confirmation, no trading. Okay. Without weak momentum plus structure break plus confirmation, you are just guessing. Okay, you're just guessing only. So always wait for weak momentum, structure break, and wait for confirmation. So why most traders lose? The 30% rule. So 30% meaning that the pattern, only 30% of your edge come from the pattern itself. 20%, 25% contact is the trend clear, weigh the price in the bigger pictures. 25% timing, entering at the right moment, not too early, not too late. 20% risk management, position sizing, stop placement, and knowing where you are wrong. So whenever you see the pattern, you have to wait. Okay, timing, you wait for confirmation, and then you always ask yourself where is your stop loss if you want to place buy or sell. Okay. Measure don't guessing. Step 1. First, identify the pole. So find the previous impulsive move, which is, like impulsive mean that price is keep rising, right? Impulse. So basically it's on the trend. Price is move with the trend. Okay. There is a strong directional candle frequency before the pattern form. Measure from the high. Calculate the high of the pole from the start to the end. This is the projected move distance. I'm gonna show you if you see those like flag pattern or pennant, how we're gonna measure the distance. Okay, project the forward. Add the measurement to the breakout point that are structures. Realistic target, not guessing. Let's just find the example. Let me pull out the chart for you guys. Oof. The truly real. Okay, let's just pull out here, right? Okay, I still remember there's some pattern we have is here. Okay. Okay, what is this? To me, this is a pennant, right? Which is where, which is here. It's here, right? Consideration. Okay, continuation. You see the kind of squeeze before the breakout. Here, right? So they say that we gonna measure from the pole. In this case, okay, either we're gonna measure from 1, could be here to here. Okay, you target either breakout. This gonna be your target, which is here. Okay, you take the distance from the pole. Whenever breakout, this gonna be your TP, which is I see from here. But some of you guys might measure from this distance to this distance, and then the measure from breakout it's gonna be at this high. But to me, I'm gonna start off with whenever price kind of make out, like have the start. So my pole is here. I'm gonna measure from here. So whenever it break out, right, it's gonna be at this level. That's gonna be like TP. Or whenever you make a this resistance level, or let's just say breakout here, right? You can see this still break out, and then after that pull back from this, the resistance become the support level. This was the all-time high as well, that time, right? You can say the big squeeze, the pennant here, continuation, okay, in H4 or even in daily time frame. You'll see it really clearly. These are one. And the channel, do you see the channel here? This could be the channel, or this one could be the flag, right? Flag here. So this one, it will look like this. This is gonna be the bullish flag, right? Which is, you see that? This is bearish. This is the bullish. This will be like flag though, but this is considered at the channel as well. Let me go to H4 to have a closer look here. Like to me, I'm gonna consider it's a flag here, but it's a breakout, right? It's for being like something like that, and then being bearish here. but then it break out, retest, and then continue somewhere here, right? So if we're gonna measure from this pole to this, gonna put here. Whenever it break out, this is gonna be the, you see that? The target somewhere around here. Almost hit this swing high. Okay? And another one, we also see the pattern is all repeated. Being sideways, which is where, remember goal, we have they are being sideways before they make the breakout in H4. Okay, it was here, right? One is here. One, you can say that like this level, but I think I draw in a H4, which is H4 is here. Okay, you see that? They break out and then you wait for retest. Okay, this one you can use the wing sideways or you can use the flag like that as well, the channel. So whatever you want to do, right? After that, you will see it's breakout, close below, pull back, retest, and then you sell. And we also have another, which is triangle. You will see that the pattern it keep repeating. Here, right? Repeating here. This is considered a triangle as well, right? Then after that, they break out and continue to fall. This is for gold. You will see it's very often. So right now, they are also see the being squeezed triangle, and then you can see it's breakout, right? You will see the pattern always somewhere around here. Also, you should want to look really for the pattern. H1, right? Before they break out, we also have this. We also have like this breakout as well. Okay. And you see that they break out from the key level, which is, if you're going to look on the left here, this is the support level. Which is here. Sorry, this is the level. Okay, this is the level. And when it goes in H4, you see that this is support level. Now it's breakout, right? You see breakout become the resistance. Then you can find the pattern. This is also pattern, right? You can see the breakout. This is also the key level. Okay. So if you love to trade gold, you don't ignore the those like the pattern that you see. So the pattern is not a signal. You need to wait for confirmation, right? Meaning that whenever we see the pattern, we should break out in H4 was here, right? Yeah. The breakout meaning that needed to break out with the body, okay? The body, okay. Okay, I'll go to H1. D1 is better. You're gonna see that the body have to close above, right? Here. All right. This is on the H4 time frame, right? You will see that in the breakout, let's just say somewhere around here. Okay. The body is breakout, and then you wait for the pullback. That is your confirmation. Confirm breakout because if the body is close beyond, this cannot close beyond the triangle here, right? Close beyond, you wait for the pullback and then you buy. Okay. You will see that you go to the daily time frame, you will see it very clearly. Okay. Here. And then the reversal pattern, okay, of course, reversal pattern, we're talking about like the double top, double bottom, and then you see the weak momentum. I already say that those like RSI divergence, okay, structure break confirmation, right? Okay, this is the one. For the reversal pattern, bigger move, okay? If happen in a higher time frame, you're gonna say that that's gonna be very, very bigger move, okay? We have double top and but double bottom. 5 peak to the next line high, protect from the high line breakout. You need to wait for the breakout, wait for the pullback, retest, and then you buy. Or you look for the head and shoulder, okay, measure head to the next line high, project from the next line for the breakout point, okay. Head and shoulder, this is the left head and this is the right shoulder. Look here. We saw that in gold, okay. H4. One, I think the weekly, I think I saw that BTC. Yep. Let's look for the BTC for example, right? You look for the BTC. This is a weekly time frame. Now, I'm going to show you the divergence first, okay? This is a weekly divergence, which is price is make the higher high, higher low, higher high, higher low. To up to here, you see that this make the higher high. But you look at the indicator, it make the lower high. This is a week of momentum already, right? You see that price make the higher high, indicator is make a lower high. And this is on a weekly time frame, meaning that it show you a bigger move here, okay? Right here. And you may consider this one, this is a double top as well. This is double top, right? Double top. Then after that, what do you see? You see the breakout of the neckline, right? This is a breakout of the neckline. Where? Which is here, right? And then what they say that you see that double top, double bottom, project from the next line breakout, neckline breakout. You project from where? Next line is breakout here, usually breakout, right? Usually, whenever you break out here, usually if you want to sell, we're gonna wait for the pullback. But this is a weekly time frame. I'm gonna move back here. Okay, I go to the D1. What do you see? Daily time frame also show you a sign of reversal, rejection, double top here. Okay, but then you see, oh, but here it show me the double bottom. I say, hey, Peggy, there's double top here, but this one also show me double top, double bottom here. Can I buy? Okay, and I buy. So this is like M pattern, but they also have like W pattern here. So what I'm gonna do? Meaning that, what do you, whenever you see like that, they are being sideways, right? Whenever you see there's a signal buy and sell here, what do you do that? You know that they are being sideways. So whenever they're being sideways ranging, okay, right? They're being ranging here, correct? So what you need to do, you need to buy at the upper, buy at the lower and sell at the upper, and the stop loss above the box, above the ranging. But whenever you see the ranging market here, and this is why this is the resistance already, you can wait for the breakout. This is already breakout. Then you wait for the pullback. But where you're gonna sell based on this level in D1? And then we need to go find the level 1. We may consider to sell here at next resistance. Or maybe second resistance is here if you want to sell. We consume to H4 to have a closer look. Okay, right? Before they break out, somewhere we can see that they are being sideways as well in the lower time frame. Here, they're being lower time frame here. So if the price come to this zone, I think we might consider to sell one. And price have reacted off. Let's see. Right? And then it falling. You see that? You catch the sell at this level where we know that this is a weekly time frame, right? Weekly, they are being double top, but then they are being sideways first. You see that? In H4 being sideways, or in D1, right? You see the rejection go back, rejected, rising, and after that they break. But we're gonna cause the break where in the H daily time frame here. Break meaning that I draw from the body. You draw from the body, right? The body. Close below, rejection, the body is close above the line. This cannot close below. Whenever you close below here, somewhere where the pullback, you might sell here already one sell. If price go back up again, you can sell. Why? Because they have break out of this support level. This is support level. Now, this is support level, and then you say that, oh, can I sell at the resistance? Yeah, this is your resistance. But when price go back up again, you're not going to sell at the resistance because smart money, they will consider this one as your liquidity. Okay, so whoever sell again at the resistance, you're going to get stopped out because the smart money will say, look, this one at the liquidity. Then you wait for price to pull back here. We could say that this is a supply zone. Or this is supply zone, small candle here, meaning what? In the lower time frame, which is H4, this is being the consolidation, right? You see that being sideways here. Before, you think about like they are collecting the order here. Before, they have enough order to push the price break below this key level. Only smart money, they can break the key level. We cannot. We don't have the power to break the key level, right? So if you go to the D1, you will say that, look at the D1 time frame. Push the price break below. Okay, you see that. Small candle is just maybe no smart money in the market. It's just like tell buy, sell, buy, sell, buy, sell, buy, sell here, right? Push the price break below. After that, it's slightly pull back and continue to sell. This one is smart money buyback. You see the candle like big and long like this. We know that smart money is in control. In the market, push the price to where? Push the price break above this resistance level because they want to go to the POI, point of interest, which is somewhere around here, supply zone. Because this is a order raising somewhere around here. Push the price, trigger, and then falling. Okay? And after that, head and shoulder. Head and shoulder, I think I saw that in gold. Head and shoulder. See that in the like yesterday when price was somewhere here. This level. Okay. I think the lower time frame. Or in the M5, which is here. We look this level. We want to buy because H1 closing with bullish candle here, right? Rejection. So this is not the chart that I'm looking at. Okay, this chart is it is IC. Yeah, I see market. Okay. You will see the bounce off from here, but my confirmation is where? This one, the rejection. Okay, this is not my confirmation, just the rejection. We don't know whether they want to really revert. My confirmation is this candle. This candle engulf this candle, right? So I'm waiting for price to pull back. You see the pullback, I think in the lower time frame. Here. Okay. This is a breakout. But I try to find head and shoulder. This is not a good example. Let me try to find head and shoulder. Okay, here, right? We may consider this head and shoulder, the reversal. Okay, we're talking about this. So this is double top, okay, in H4, guys. Like this is double top, double top. And then we want to look for the momentum. You can use the R side. What do you look at the R side? There's no divergence, but this is a double top, and then they make the equal high, right? This will make an equal high. You see that? And then the momentum is changing from, you see that I side is make the lower high. You look for the momentum, which is the MACD. MACD is where crossover, and you can see the histogram, okay, from the positive, and now it's become negative. So the momentum is shifted. Okay, this is the one. After that, price come back to test the next line here. You can have a sell where here at this level, right? The first time it break out, this is the support level, break below. It's not pull back immediately, it come down, and after that go back here again, and then you can have another sell entry. This is double top, head and shoulder, head and shoulder. Okay. This is not the correct head and shoulder, because head and shoulder we need to wait for them to break. Head and shoulder have to form like that, right? This is, or could be somewhere around here. This is a head and shoulder that I'm looking for. Maybe. Okay. This may be the one. No. Okay. This not. I think I saw one in the, but that would be in the lower time frame. Okay, here. We will consider this one at the head and shoulder as well, but in the big one. This is the, okay, let's just go for the M15. Okay, M15 is more clearer, right? Like over here, from here, price make a higher high, higher low, higher high. Okay, first is make the double top. Okay, and then they break below this low. Break below, we can see that the body is close below, right? So this is gonna be the left. This is the head, price break below, right? This is just the high, break below, slightly pull back and break, and this is my right shoulder. This is the head, this is the left shoulder. Okay, this is the head. So in this one, some of you will say, okay, can I consider at the double top? Yes. Okay. On the double top, okay, we also see confirmation that price had closed below this level, which is very strong body here, right? With this strong body. And after that, slightly pull back to this resistance, right? You will see that it pull back to the resistance here, right? You see support become pullback resistance. So if you were to sell again, like second sell here, you sell again here, you have slightly pullback. After that, price is rising here and then falling very strong. Why? It could be they go to make the right shoulder. Second, if we're gonna zoom in, okay, they have the another FVG or fair value gap, which is here. Right? So if you sell at the resistance for the first time, you can sell, but if price go back up again, you see like rejection and then like don't it seems want to break, then you will keep in mind you shouldn't sell again at this level because why? Price go to this FVG. So this is their point interest, okay? Or they want to go and complete the left the right shoulder, which is here. Okay, there's nothing wrong if you want to trade with support and resistance, yes. But whenever you trade with the support and resistance, first time price falling, go back up again. Okay, you have to look, okay, what if price close above this resistance? Then you say, oh, above the resistance, you have the FVG here. Okay, because usually if price falling from the resistance, they will just want to continue, okay, to go, for example, break, pull back, and then will continue to go falling. But now they go back up again here to where? To find this one, to find the POI or point interest over here. Okay, and then you see that after they go, you will see the confirmation, right? You see the rejection, you see the price action. Whenever price go, right, this is your confirmation. Let's say you sell again here, you got stop out, or you did not close, price falling a little bit and then rising. You will see that this is your confirmation. This is your confirmation. Your confirmation, okay, after that price is falling, make a bad in gap, continue to fall and rising back up again, and then you might be panic. But you keep in mind, right? They make the lower high. So you can just mark out, if you go back again, you want to sell, where is stop loss above this swing high. Okay, above this swing high, because this is the FVG. But one price go to the FVG here, then go back up again, you not consider this your FVG already because FVG have taken. You may consider this on your resistance level. Okay, because FVG had taken, go back up again, you not consider this is the FVG. FVG had done. And price go back up again, you can sell. You can say, okay, this is your supply zone from this swing body and this swing. The supply zone is here. Okay, and price is go back, right? And then one of the things you can see that they make a lower high here, right? Then they break out of this support level, meaning breakout, which is this kind of breakout. Whenever you see the breakout, it's always break out the key level, you can see that they're going to create the FVG or fair value gap. Okay, this is the double top, completes the left shoulder, right, and continue, and then falling. You can consider this is another equal high. Here, equal high here. Then breakout, retest, sell. All right, so consistent over home rules. So you always aim for the big move. Okay, hold through, pull back, ignore key level. No, you shouldn't ignore key level. So whenever if you want to sell, key level, if you see you sell at the resistance, for example, then price is approaching the support level. One, you could close at least 50%, or you just totally close first. But if price can break the key level, then you can wait for the pullback. If they break a support level, break below, you wait for price to pull back and then you sell. Okay, so turn winner into break even. No, you shouldn't, meaning that you just wasting your time. Okay, so whenever price is falling like so many people, 100 people, 200 people, what you need to do, you shouldn't just keep the stop loss to break even. If price rising, reward and hit your break even, you earn nothing. At least you close 50% of your loss size, and then you continue to trial, like how many percent, like maybe every 20 pip or 30 pip. Okay, you don't trade like winning to just break even. Okay, what time shot Okay, there's a question. What time chart frame we need to check for the pattern? Okay, for the pattern, you will see in every time frame, H1, M15, M5, but you shouldn't ignore the higher time frame. So basically, always, okay, you look on a higher time frame. For example, like you identify the key level support within a higher time frame. You go down to the lower time frame because the confirmation in the lower time frame sometimes it show you the chart pattern, okay, or it could show you like those like prior action, or you could show you the confirmation like divergence, okay. But if you spot the chart pattern like double top, double bottom on a higher time frame, H1 and above, H1, D1 or weekly, you know that it's gonna be very, very big move. Plus, there's a confirmation such as divergence as well, right? Which is just now I show you the BTC. Okay, BTC here. Okay, you look in the BTC weekly, right? Your weekly time frame here, there's for the double top here first, right? There's a divergence as well, I believe. Yeah, price make a higher high, indicator it make a low high. This is a big move, but then price cannot break below the support level, right? You see that slightly here and then it bounce off somewhere around here. Okay, and then continue to make the higher high, higher low, but up to this level, what you can see, they make a divergence here. You look at the day one time frame, monthly. Monthly divergence also happen in the monthly time frame, right? You can see, you start to read, this is very strong bullish candle. After that, you see that put the price higher, break above this high, right? You see that this week, and then the body slightly shorter than this, and after that, it getting shorter and shorter, and it's will break. You see that this is the divergence, and look at the body, meaning that nobody is willing to buy at this level anymore, right? Monthly time frame and the divergence is here. You go to weekly, you will look very obvious that you see that this is divergence, and price was just ranging here, right? Before they decided to break, you see that from this they can break this. This is the key level. If you were to look at the support resistance, this is a support level, and easily break below this, really break below. What about we go to D1 time frame, right? In the D1 time frame, right? You just want to get the make sure at the body, okay? Close below here, and then it pull back up here, and then continue to fall. Another thing, right? When you see that this was the peak, this was the highs, right? This was the high. And then you can see the price close below to make what? You don't need to look so far from here if you like get confused. Okay, I'll show you here. This was the high, right? And this high, where is the low that puts the price break above this high, which is this low, correct? That pulls the price break above. Okay, so you already identify this is the high, this is the low. This is, you see that price have closed below, right? So in order for a break a high, you want to continue, they should just want to continue to make their higher high, higher low. But instead, they close below this low. This low that put the price break above this high to make a new high. So this is very important low. This is the one, push the price break above this high, this high. After that, you see that close below, which is big body, right? This candle, and continue to make a higher high, high, lower, lower, lower high. Okay, it's very important you ask yourself first, which low is push the price to make the higher high. Okay, so if you confuse, right? If you confuse, you shouldn't you look for the recent high, the recent low. Okay, because some of you guys still don't know how to identify which high, this one, is this one, or you look for the recent one. Look for like significant that push the price break above the high. For example, this one, right? This one is what ranging, correct? You see that it was being sideways. You're being sideways. Now, if you do like, you know, like where is the low, guys? I have a question. I have the number. You think low number 1, number 2, or number 3 that put the price break go to this one? Which low? 1, 2, 3. 1, 2, 3. You think which one? 1, 2, 3. Number what? Okay, some say number 2. What about you guys? Number 2, number 1. Okay. If I'm gonna look here based on daily time frame, okay, I would pick number 1. I would pick number 1. Okay, I would pick number 1. You say that, is this number 2, number 1, or number 2, or number 3 here? I would pick because this was just arranging, okay? Even though this one make the price, push the price break above and pull back and slightly pull back, and now you see that they are being sideways here in the lower time frame before the breakout, right? The breakout here. Okay, breakout push the price, not even break here. So if if you go to the weekly, you will see it really clearly that where this is the low here that push the price break above this high. Okay, pull back, being sideways. Okay, D1 go back again. It's here, right? So I where am I just now? Okay, here. I would pick this is the low, then push the price break above the high. Is it I'm correct? Here. Why? Look on your left, right? The structure, higher high, higher low, higher high, higher low, and push the price to go to this high. This high. So this is the low. You look to the left, right? This is still make the break of structure here. Okay, and so on and so on. Okay. Pro exit target. So you take the profit at the key level always. Don't ignore the key level. Okay. Don't be greedy. If you sell the resistance, you just take the profit at where support level in the same time frame. In the same time frame, like just now, for example, don't be greedy. You ask yourself how much you need per day. Okay. Don't need to get rich in one day. For example, here. Okay. For example, I want in H4. Okay. For example, just now, okay, I identify in week in H1, and then I see there's a FVG here, so I draw. This is my FVG. Okay. This is my FVG, but it's not. I only not trade with only FVG. One is the FVG. Second, my FVG. I go to the low M15. Okay, my FVG have 50% Fibonacci. Okay, up and price is here. Okay, price was somewhere falling somewhere here. If price break above this support level, this is support level, meaning that I'm gonna use the extension. So where I have 161.8. So within my FVG that I want to trade, we have 61.8 and 50% and 161.8. Okay, so I'm gonna buy here if price falling. Okay, and this is gonna be my take profit because this is a support level. If price close below, this one gonna be my resistance level. Go to the M5. Tick, then come back again, right? Second here, and here's my take profit. If the first touch here, this is 127 extension in the box. Catch here, you catch the move, the first time move, how many pip? 500 pip or 5,000 point. And then price come again at this level, I buy. Okay. Come here, touch, you did not call, coming up again. You don't be panic, you see the rejection and price is closed and now hit my take profit at the key level. Okay. But you know that from this swing to this TP, it's almost 600 pip. Then you just exit. If you trade gold now today, it's very easy for you to earn 100 pip, 200 pip because gold move a lot now today. So you ask yourself how much you need. Okay, don't be greedy. You will say, oh, from here, I'm gonna just hold. Maybe from here, I'm gonna hold to like another neck resistance. No, because one thing why I keep here, because you look at the structure always, price make a lower high. Today, we buy at sell for gold, right? So I buy because where price come from the support level in the higher time frame. Because you look at HD1, you see the rejection, right? You see the rejection, H4, closing with bullish and engulfing. So wait for the pullback and then you buy. Because the next resistance level is where in H4, it's at this level. This is a resistance. But then you ask me, oh, Peggy, why don't you just hold away to first resistance? I just identify this is my resistance. Doesn't mean that, oh, it must go and this resistance because sometimes price may not come to the resistance level. So whenever you do a trade, right? You do a trading, you just ask yourself how much you need. Are you happy with the profit? You happy? You just exit and close. Do other thing else. Tomorrow you can just come back and wait for the right setup and then you trade. Okay. To me, I close already. If price really go back up and hits my resistance, am I regret that I closed my buy entry? No. I can just wait for the sell entry because my daily buy at today, I'm looking for the sell. But I cannot sell at the support level, right? I need to sell at the resistance. So I can just wait for the sell entry here. If price comes, show me the confirmation, show me the pattern that I'm familiar with, and then I'm gonna short at this level. If don't have, and then I'm gonna wait. Okay? Because why? I buy here, okay? But sometimes I might hit a stop loss. So I need to put a stop loss anyway. If the price fall away here, hit my stop loss, and then I will look for another entry here. See whether price gonna react from this level. Because if I don't put my stop loss from this entry first to this, you see that how many pip? 4,700 pip. No, right? I just cut loss maybe at 20 or 30 pip. Rather than I buy here and then price is no, I was wrong, and then price falling all the way to this OB and 61.8, another 450 pip. No, I'm not gonna bear, to waste my capital here. I just cut loss or hit my stop loss first, and then I wait to look for another entry here if I see the confirmation. Because one price, you see that in the M15 price make a lower low, lower high, right? And buy here just for the FBG in the H1. Okay, so always have like a second plan because sometimes our setup could be hit stop loss as well. That doesn't guarantee that it's gonna always give you the TP. Okay. Okay, use measure move target scale out in the stage. So scale out close 50% and then you use telling stop loss or shift like every 30 pip or 40 pip. So up to you. Okay, driven by consistency. So let's just imagine every day you just aim for like $200 or $500 per day, but be consistent. Rather than today you win 5,000, tomorrow you lose 3,000. The next day you win 1,000, then another day you lose 5,000. It's not consistent at all. Okay, small profit, but be consistent. That is enough. Okay, for the forex market because you should look for the forex market for like your own business. Like you want to grow the business. Okay, like if you do the business for the startup, you will spend a lot of money to start your own business, right? It's same like the forex market. But you need to invest on yourself, like buying study the strategy, find the right strategy that's suitable for your own lifestyle. And then you start to grow and be consistency, be disciplined, okay? And look the forex market like your own business, okay? Don't try to oh, I want to get rich today fast, and then tomorrow you get back to the market. The next day you win, another day you lose. No, right? Filtering bad pattern is not obvious, give it. So unclear trend, okay. Whenever you see unclear trend, don't trade, okay. Weak breakout. Weak breakout meaning a small candle, low volume, no conviction. A real breakout show urgency in the move. Whenever I talking of breakout, have to be with the body large and long that break the key level and create the fair blue gap. That's to me that's gonna be really strong breakout. Okay, breakout with the key level with the long candle that create the FVG. That's gonna be the strong breakout. Okay, you remember that. Messy structure. If you are constant to see the pattern is not there. Clean pattern are obvious to train your eyes. Okay, whenever you see the pattern, okay, if you really unsure, not clear, then you shouldn't trade. You should just look for one. If you say that, okay, you always trade the M15, you don't know what the pattern is at. You cannot see that we like the structure, you don't know what happening. You go where on a higher time frame, you go on a higher time frame, you will see that. Okay, based on gold right now, I could say that okay, the momentum is shifting from bullish to bearish. One will say that because price is make the low high. Second one, they break out of the key level, which is this is the used to be support level. It a breakout already. So this considered resistance level because they make the lower high. And another one, if you want to choose a trend line, you can say a breakout trend line. So basically, we can say that okay, this is a momentum is changing from bullish to bearish, and you can pull out the MACD. MACD also have show you the momentum. Histogram is stay below the zero line. It show you the negative. Okay, you see, then it show you the negative, right? Then you say, okay, there's a momentum shifting. Then you tell me, oh, so gold will fall until where? Where to go? Heading to. If this month, okay, because this one haven't closed. If this month is closing with strong bearish candle, create the OB like that, I would say, okay, this is strong shifting. But right now, I would say that based in the monthly time frame, okay, or weekly, right now, this is support level for weekly time frame. I'm gonna use weekly for the example. Okay, this is my support level weekly. So if this week, okay, price close below, I would say that the next support level I'm looking where here. Is here. Is here. Okay. Anyone trade gold that saw gold what like 2000? 2000, we saw that before 1000, 1600 a few years ago, right? So this on a higher time frame, right? You see that this is a support level. And you were to zoom in very closely, it's go to where? It's go to this demand zone in weekly. But yesterday price is falling on where? On the D1 extension 127 here yesterday. Okay, but then you see that price falling and now it's push the price close above our support level, close above the extension 127, right? So right now D1, this is a resistance, this is a resistance, this is another resistance. Why? Because this is a support level, right? You see that this is a support level. You see that close below with the body, pull back, you sell. This is another resistance level. Okay, this is a resistance meaning like if price break above from the resistance become your pullback support level, right? So right now we're gonna look for the sell entry, but where we're gonna sell? Then we're gonna sell at the H4, which is here. Adjust here. The resistance at 4,500. That is the resistance level in gold now because price have broke below 5,000, 4,005, right? So right now this is set at the first resistance. Okay. And this would be the swing low of the day, 4,100, but it was falling all the way to this level, 4099. This is a swing low. Now, where your trading range? This is your trading range, right? Because where this is the high, this is your low. So your trading range is from here, pull back, sell, right? So yesterday, you used Fibonacci from this high to this low. This is how many percent? 50. No, 61.8. You see that 61.8% yesterday, right? That's how you sell. So you have to sell where is your trading range, where is the high, this is the low. Will you say that, okay, this is not, can I pull there? No. Why? Because you see this, price is make a swing low, make a pullback, and make the continue, right? So your trading range is here and here, okay? Weak breakout close ranging market, okay, in short or ranging market, pattern fail constantly, wait for trending condition before pattern trading. Okay, if you love the trade the range market or ranging market, like I myself, I'm gonna tell you the strategy. So basically what you need to do, you draw the pattern, the like sideways market, the body and the body. Draw from the body and to the body of the candle. And then you wait for the body close above the box, for example. Here. Right? In H1, this is a ranging market. Okay, this is the ranging market here. You can see that close below with the body, pull back, you sell, right? Or this are also being sideways. Being sideways, right? Breakout of because of the body breakout. You will see a lot of the time also was ranging in gold here, somewhere here, here, right? You will see that this breakout, suddenly pull back to where? Sometimes it not pull back to here, they pull back to this week, and this week, then continue, right? You see that breakout. So you draw from the body of the candle to the body to the body. Okay. I think I saw quite a lot. Even in the M15, they also have diving sideways. Uh, like for example here. This is also equal high pattern, right? But then it was being sideways, right? You see that? I draw from the body in the body, then eventually the breakout. Okay, because why? The wick is just a wick. Liquidity are just a wick, but the real price is the body. That's why you have the opening, closing, opening, closing. It's just a liquidity, put the price up and down, but the real price is the body, not the wick. Okay? Okay, before every trade, ask these 4 questions. Is there a trend clear, uptrend, downtrend, or just being sideways? Is the pattern is very clear, obvious, like train your eye to look for double top, double bottom, or equal high, equal low, or those like W or M pattern kind of thing. Okay. Is there a confidence? So whenever we see like pattern, okay, pattern is not a signal, okay, it's not a signal, so you need to have confidence with support and resistance, demand and supply, any Fibonacci level or Fibonacci retracement or Fibonacci extension, session timing or range aligning with your pattern signal as well. If you see that the pattern happen in the higher time frame, which is H4, that is at the resistance level in H4 and above, you know that that's going to be very, very big move. Okay. And then you can check out with RSI or MACD for those like maybe there's a divergence or momentum have changing. Okay. Then you can buy or sell. Is the breakout strong? Decisive see candle close momentum behind it, not just a wick through the level. So whenever we look for the strong breakout with the key level with really strong candle, that create the FVG equal to strong breakout. Okay, breakout the key level with really big and long candle, that create the FVG, that's gonna be really strong breakout. Here, right? Here, for example, here, right? And that is create the FVG though. Okay. Breakout of the key level might be really large and long candle, that create the FVG. Okay, and then there is really strong breakout. Then price pull back to the FVG, you can sell. Okay. For example here, right? In H1. Before that, it was ranging, right? You said it was ranging here. And after that, you see that they breakout of this, like you can see that breakout because of this candle, right? Before that, you can see a lot of liquidity here, resting here, breakout here. And after that, you see that they have created the FVG, which is from this, like from this to this, from this to this. This is a FVG. Sell zone, right? After that, what do you see? Perhaps break, pull back, break out, pull back, continue, right? Yeah. Imagine you hold here, break out, right? Pull back. This is in H1. Look at the bigger picture. You don't look at the small, because if you always in the lower time frame, you always want to close the trade. See that from here to here, how many? You look how many is it? A lot, right? From where? 5010 to 4842, 10,000, 20,000 point. Yeah, you see that? Okay. And it take about 1 day and 10 hours from this to reach this level. Okay. Any question, guys? Any question? Any question? If there is no question, where am I already? 2, 3, 4. If no question, I have one more slide to finish. Okay, so trade with the edge. Okay, structure, confirmation, patient, and be consistency. Always. Okay, pattern, give the contact, not the signal. Wait for confirmation. Always. Always wait for confirmation. Okay, major targets, not just guessing. No trade. No trade in a position. Conference multiple give you high probability setup. Okay, that should be all for today, guys. I'm gonna share the slides, okay? But I think they're going to download this, upload in the YouTube. Okay, I'm gonna have a quick I didn't know that I overshot like 10 minutes. Okay, I'm gonna give you the key level for goals, okay, guys, before we end the webinar. Okay, so today key level, we're gonna look for the sell entry if price come and then you wait for confirmation, okay? This is the resistance, okay? And the support level is still the same at the swing low. Support level is here. Okay, the next resistance. So whenever you wait for price come and then you wait for confirmation, okay? This is the second support level. So now I think they might be sideways because yesterday it's moved a lot. So this is a key level for today. Okay, guys. So I'm gonna catch you guys again on next Tuesday. Okay, guys. So thank you so much for joining my session. Okay, see you guys again on next Tuesday. All right. Take care and good luck. Bye, guys. Bye bye.